The NFP data released last week gave the Federal Reserve the numbers they needed to justify a rate cut, at least from a labour market point of view. Headline NFP was still strong at over 200,000, but did ease from the previous month. Unemployment increased and wage growth slowed, so unsurprisingly, the markets increased bets of a September rate cut. But the labour market is only one part of the equation. Obviously, inflation itself is another big part. It almost feels like the whole weight of that September rate cut is now resting on the shoulders of these upcoming inflation releases, one of which is coming out this week, which is the US CPI release. This release and the PCEPI release in a couple of weeks are the last ones before the next FOMC meeting. Now, although that meeting is not expected to be live meaning there would be a policy change, the markets are betting that the September one will be. So why do these releases matter this early? Well, they'll help set the tone from the Fed at the end of this month. If the September meeting is going to be live, there's a good chance the Fed will give some kind of hint about that, even if it's just a subtle one. In fact, this week Jerome Powell has been testifying before Congress, and it seems he's paving the way for rate cuts. But it's no secret the Fed has been waiting for more progress on inflation, back towards that 2% target. But even if inflation does ease, the reaction in the markets still might not be that huge. The markets are already pricing in the September rate cut, although much like NFP, they could price it in further. But the real kicker would be a miss from inflation. Headline CPI has been stalling just above 3%, and core has been falling but still remains high. I think we'd need to see further declines in both of those for the Fed to seriously consider a September rate cut. That could also include the PCEPI data later in the month. After all, according to the Fed's dot plot and the last FOMC meeting, the Fed is only anticipating one rate cut this year, so it might take a good surprise from the data to change their minds. At the moment, the consensus is that there'll be 0.2% month on month for core inflation, so anything less than that could lock in the September rate cut.